Welcome everybody. It's good to hear you. Our number of attendees on English version of the conference is growing at a tremendous pace, quarter by quarter. I think it's doubling. Yes, from 2 to 4 or 6. Yes, so let's hope this will continue this way. We will run the presentation in a traditional mode, so you will see the slides in the same sequence, but we have invited a guest, Daniel Czałszewicz, who is from Croatia, Bosnia, yes, and he is running our new line of business within the Payten area of business, which is merchant related, yes, for independent post-deployment and electronic cash registers, and he will tell a few words about this business in the region and the prospects for this business. But let's go for the numbers first and a quick update on what happened. So in third quarter, you can notice a very good payment business, improving efficiency in banking, which contributed very well to the results on operating level. Marcin will comment this. We see tremendous e-commerce growth and new business lines in POS, adding up to mostly this merchant-related business, adding to our business lines. We were hit in the third quarter in Payten by COVID in one business line. This is independent ATM deployment, which is generating its result mostly on the tourists, which, as you know, did not come this year to the regions where we operate. So this was heavily loss-bringing, and this roughly, we believe, this year can negatively impact, mostly in Q3, our operating profit in aggregated level of around 1 million euros, yes, compared to last year, yes. Growth in profitability in banking, mobile banking and channel solutions very heavily contributed to this, especially origination solutions like digital origination, loan origination solutions. We see an increasing interest in these solutions throughout the region and out of the regions, yes. In dedicated solutions, we see a big interest in our collaboration tool Live, yes, but also contact center related solution, but also other BPM related solutions and public administration projects. And we see definite, especially in third quarter, we see a decline in the infrastructure business, which doesn't make us sad at all. I mean, it's a good trend, and an increase in own solutions business, yes. And for COVID, which is the topic today, I mentioned IAD, independent ATM deployment, as the one affected. Also, we have affiliation business where we generate merchants and build a network for the banks in Colombia, mostly a little bit in Peru. And in these two countries, because of COVID, this growth has very much slowed down, so we see worse than expected results in these two countries. But let's look at the deals we had. So let's move to the next slide. In banking business unit, you know, there is many small deals, but the ones we wanted to show you is adaptive element platform. We sold to a big international banking group. Yes, this is a mobile banking platform which well sells well and attracts very nice revenue for us in this business line. Absolute is a core banking solution where we sold one of the elements of this core banking, not a complete trade finance platform for ING in Romania. And digital origination sold to a bank in Serbia, but this is continuing every quarter. We have a deal, one or two, for this digital origination, and we see, as I mentioned before, big interest for this. In dedicated solutions, you see few public administration deals, which are mostly BPM related, collaboration related, electronic document flow related. And also pretty good business performance from a third-party solution in Turkey, Dynatrace, which is continuously growing. We expect growth within this partnership in Turkey for next year, and that's nicely contributing in dedicated solutions as well. Let's move on. In payment, in Payten, you know, traditional ATM and POS deals, yes, a nice POS outsourcing for Société Générale, SKB Banka, but Also monitoring software solutions sold to our customers, to a bank, Komercijalna, which was not our customer before. So this is a very, very good news. And MSU, it's a tokenization solution. It's an e-commerce card tokenization solution, which is sold transactional based. So we take a fee per transaction tokenized and per transaction made using the tokenized card. And we have managed to gain additional insurance customers, which is pretty good news for this business, e-commerce business in Turkey. And now I believe let's move to results. Martin, please.
Hello, good morning or good afternoon, everyone. Before I start speaking about the results, I encourage everyone to ask questions. Yes, we have this Q&A functionality in our conference, so you can write your questions there, and we'll try to address them while presenting. And also, if you want, you can ask questions verbally by raising a hand, and then you will be unmuted, and you will be able to ask a question. In this way, for these verbal questions, probably it's better if we wait with this until the end of the presentation, and then we do it just after the slides. And for written questions, you're welcome to ask them at any time. Okay, so financial results. The structure of slides is the same as usually. So we have first a few slides covering just the last 3 months, third quarter standalone, and then in the second part we have accumulated results for 3 quarters up to date. So let's start with Q3 standalone. Basically, the summary can be short, and is what we put in the title of this slide. Okay, so we see growing profits very nicely on all levels. We see double-digit growth. At the same time, we see flat revenues. Okay, so it doesn't seem very logical before you get into details. And when you start looking at the revenue structure, this is where the answer is, yes. Because flat revenues do not mean that the structure is the same. The drop in sales was in infrastructure part of our business, in reselling of infrastructure and third-party solutions. Almost 6 million euros, as I will show on the coming slides. And at the same time, banking and payment were these segments, business units where sales were growing, and partially or to a great extent compensated for the drop in infrastructure part. But that means that our sales mix improved, and our own solutions are dominating even further in the sales structure, and it helped us to improve the margins, even though the sales were not growing in Q3. Okay, so this is a very, very short story about this mismatch between revenues and profits. I will show details on the coming slides. In this slide, let me only tell you that what happened between operating profit, EBIT, and net profit. So very quickly, result on financial activity is slightly negative, 35,000 euro loss, and this is as expected. Okay, on one hand, we have revaluation of our earnout obligations, especially in Turkey related to mobile company. This is adding almost 400,000 euro costs to our financial activity. It was partially compensated by better results on foreign exchange differences on other assets and liabilities. Plus, we have regular interest expenses on bank loans and leasing liabilities. Therefore, we have this slight negative result on financial activity. Nothing surprising here, and also nothing surprising in tax. Okay, effective tax rate was 14.6 compared to 14.3 in the third quarter of 2019. You see a slight growth, mainly in operational activities of our big operations, and basically there's nothing exciting to talk about here. Just a reminder what we are presenting in this non-IFRS section. So these results are excluding PPA amortization, that is intangible assets that we when accounting for acquisitions, and we amortize afterwards. Costs of share-based payment, and also revaluation of these M&A related financial obligations. Okay, so this is why the net profit, non-IFRS net profit, is showing bigger difference than EBIT, because this revaluation is reported in financial expenses, as I mentioned a second ago. Okay, so this is the big picture. Let me now show you the results by segments, by business units. Okay, so let's start maybe from the bottom of the table, and this is where dedicated solutions are. And you can see this drop in revenues that I mentioned a minute ago. Okay, almost 6 million down here in revenues, mainly on infrastructure, and as you can see, with no big impact on results. Okay, so despite this drop, the value of EBIT and EBITDA remained on comparable levels to the last year. So this shows that less sales of infrastructure didn't harm our profits. And the same time, sales in payment and in banking were growing. Okay, so let's look at payment for a second. We have the separate slide which shows what parts of payment are growing or dropping in terms of revenues, and you can see here that the main driver for the growth in Q3 was POS terminal line. Okay, we see here 2.4 million euro additional revenue compared to last year. This is coming both from acquisitions and from organic business. In e-commerce, we have seen growing sales for a few quarters, and it is confirmed again in Q3 2020. The growth here is mainly due to higher number of transactions that we process online. And in ATM and processing, the revenues, the sales were comparable, slightly lower than in Q3 19. In ATMs, we had on one hand increase in sales of our traditional services, ATM deliveries and maintenance. On the other hand, we had much lower revenues from independent ATM network. This is the COVID-related situation that Piotr described. In those touristic locations, there was simply no or fewer tourists than last year. And we are speaking here about Croatia, which was partially closed, and also Montenegro and Albania. So obviously the tourism was not comparable to last year in these places. And in processing, we see a small decline of revenues as well. And also we can say this is to some extent due to COVID, because we process here physical transactions that were made with physical cards in points, and there were simply fewer of these as well. Okay, so this growth in the revenues in payment translated to growth in EBIT and EBITDA as well. So as you can see, the profitability is comparable to what we had in Q3 of 19, and basically all these smaller business lines contributed to this growth except for processing. And last but not least, banking. In banking, you can see there was a small there was some growth in revenues as well, mainly in mobile banking and in core banking lines of our business. But what followed was a very nice growth in profitability and operating profit and EBITDA as well. This is due to higher sales, but also due to improvements in efficiency. This is because of better utilization of our existing teams, and the growth in sales was followed by much lower growth in own costs, and that's how we made this profitability grow so nicely. Okay, so this is about segments, main trends in segments. Let me show you the countries where we operate. So generally speaking, in bigger operations, both sales and well, maybe not sales, but the operating profit is growing, and sales are depending on the country growing or not. But the drop in sales, as I mentioned a few minutes ago, is mainly due to infrastructure deals that were not comparable to last year. So as you will see, they had limited impact on profits. Let's look at the biggest operations only, okay? Just to not to spend too much time on it. So when you look at Croatia, you can see some decline both in revenues and in the operating profit, and this decline is coming mainly from independent ATM network. What I mentioned just a second ago. No tourists or fewer tourists translated to fewer transactions and worse profits in this line of business. But generally speaking, Croatia, up to date, and you'll see it in a few slides, is doing okay and has comparable results to last year, even including this drop in independent ATM network. Then looking at other big operations in Macedonia, we see nice growth in both revenues and profits. This is mainly coming from banking. In Romania and Serbia, decline in revenues is what I mentioned. Yes, it's infrastructure deals that were in comparable period of last year, but not in 2020 anymore. But with limited impact on profits in Romania and with, let's say, no significant profits in Serbia. Actually, Serbia is one of those, let's say, best performing companies or operations. You can see that they doubled their operating profit year over year, and this is impressive. Yes, they ended up with 3.4 million euro operating profit in 2020, and basically all segments are improving there. So even despite lower sales in dedicated solutions, the profits are improving. And Turkey, another big operation, is also doing okay. Higher sales are mainly due to e-commerce, and also higher profits are coming from e-commerce mainly. So generally speaking, we are happy about Q3, and in our, let's say, leading operations, we can see that the trends are maintained. Now I have a few slides in the same structure about accumulated results, about results for up to date. So you can see that the trends are pretty much comparable to what I already explained for Q3. Yes, so revenues growing slower than profits and increasing profitability. Yes, this is confirmed on accumulated basis as well. And up to date, our growth in profits is between, let's say, 27 and 31%. So we consider it pretty good. This is, as I mentioned, also due to a better sales mix, better structure of our revenues. Our own solutions after 3 quarters are 71% of our overall sales. Yes, last year it was 60, 68 at the same time of the year. So we added 3 percentage points to it. Okay. Below the operating profit, we have more or less the same trends as in Q3. So negative financial result from financial activities for the same reasons, and also for effective tax rate, it's on the contrary. Yes? So effective tax rate is lower in 2020 compared to 2019. Basically due to operations and coming mainly from big companies. So Serbia, Turkey, Romania show slightly lower effective tax rate compared to the last year, but the major difference is in Croatia. Okay, I mentioned that after Q2 results, but maybe I should repeat that in Croatia we obtained a positive tax decision allowing us to reduce 2019 corporate income tax significantly due to investments that we made in the prior year. But this decision came only in June. So for prudency, we booked taxes in 2019 in higher values, and now in 2020 we decreased them respectively after having this decision. And this had the biggest impact on our effective tax rate, which dropped from 18.1% in 9 months of 19 to 16.4 in the first 3 quarters of 2020. Okay, Let's move on to segments. Basically, in segments, you can see that all operations are improving their EBIT, their operating profit, and in banking and payment, we can see higher revenue, so more or less similar picture as in Q3 only. Starting from top, so the first line is payment, and you can see the same slide covering revenues in payment, with more or less the same conclusions, maybe except for ATMs, yes, because ATMs on 3 quarters accumulated sales are growing as well as POS and e-commerce business, whereas processing is slightly lower than the year before. And this growth again drives the growth of profits in both EBIT and EBITDA. We can see a nice increase compared to the previous year. And again, this is coming from all business lines except for processing. In banking, similar comments, so growing sales and increasing profitability. You can see it even better here after 3 quarters than in Q3 standalone. And the reasons are the same. So mobile solutions and core banking, mainly multi-channel solutions, and all these, let's say, tools that allow banks to communicate with their customers using online remote channels. And in dedicated solutions, you can see some drop in sales, but at the same time, the results are improving. So again, this is due to cost savings and better sales mix, as we explained on the slide for Q3 only. Okay, and one last thing about P&L is countries. So let me focus only on the most important things here. I promised to show you Croatia after 3 quarters, and as you can see, this is confirming what I just said. The operating profit is comparable after 3 quarters of 2020, despite this drop coming from independent ATM network. In Iberia, meaning Spain and Portugal, we can see improvement compared to last year. This is POS business in Spain. We are happy about it. But at the same time, speaking about Necomplus, we see some decline in Latin America, mainly due to worse results in Macedonia improving, Romania flat, comparable, at least in terms of operating profit. The drop in revenues is what I explained before. Infrastructure projects not comparable in 2020, what we had in 2019. And Serbia, again, let me mention it, a very good performance, 7.3 million euro after 3 quarters, and much better than last year. So all segments contributing to it. In Serbia, we are having very good momentum. Improvement in Turkey, I mentioned that e-commerce is the main contributor. So generally speaking, majority of operations are doing okay and growing. So no need to complain. Just 2 words about liquidity. We had very strong operational cash flow in Q3. So this is, let's say, a very good starting point for analyzing liquidity. Here on this slide, we are presenting just balance sheet values for some selected lines. So you can see that net cash is slightly up compared to the year end, but you have to remember that in the meantime, in July, we paid almost 9 million euro of dividend to our shareholders. So even after this outflow, we are already higher than at the end of 2019. And you can see that we invested some cash in the working capital compared to the end of last year. Our short-term liabilities went down by 0.2 million. At the same time, 8.5 million was cashed out of receivables and inventory. So only a part of this repayment of short-term liabilities was funded by receivables and inventory, or all the rest was was from cash. Generally speaking, this is like confirming our expectations. The short-term liabilities at the end of the year is usually pretty high, and then during the year we are going down with them, and I expect also in Q4 we'll accumulate some liabilities, and it should contribute to positive, good operational cash flow again. And we also showed dynamic cash flow with major outflows and inflows, and this is shown for last 12 months ending end of September 2020. So you can see in the top line of this table that operational cash flow was really very strong in Q3 and in the last 12 months. This had slightly lower investments, especially in infrastructure that we use in payment outsourcing projects. Because in M&A and acquisitions, you can see that the outflows are comparable, slightly lower. Even though we don't show so many new companies added to our structure, but we continue with deferred payments, earn-out payments related to previous year acquisitions. That's why the actual outflow is not much lower. And it's worth to look at debt service and debt increase. We had small increase related with new outsourcing projects, mainly in Serbia, but at the same time we repaid a big portion of our debt. So net balance changed significantly compared to in the last 12 months. And also conversion of profits into cash is pretty good. Okay, so operational cash flow compared to EBITDA is 103%, and free cash flow over 100%. So we are very happy about this performance and cash flow in the last quarter and also the last 12 months. Okay, I was trying to be quick, and that's it for the financial comments. Now I will let Piotr and Damir tell you a bit more about solutions for merchants that we are building.
Okay, so as mentioned before, we are making a section on our merchant business. In Payten, we have decided to diversify the business line. Marcin, if you can show the next slide. And here you see the payment business divided into 6 business lines. The biggest ones, POS-related services and ATM-related services. On the right-hand side, a big one, e-commerce, yes, and smaller ones in between, independent ATM deployment, independent POS deployment, and electronic cash registers. We have processing missing here, but actually this is not needed here, yes. Now, what is important among these business lines is that ATM and POS is mostly sold to the enterprise customers, be it mostly banks, yes. Whereas if you notice the other business lines, they are transactional based businesses which are related to consumer behavior and transactions. This is independent ATM, independent POS, yes. Electronic cash registers are related to the amount of small and medium-sized merchants, mostly, yes, which have our installations. Daniel will mention more about it. And e-commerce is both. It can be enterprise, sold directly to the big banks, but majority of the business is transactional based. So it's based on processing the virtual POS, e-commerce transactions on the web, beautifully growing, by the way. And so as you see, we decided to expand into services to merchants because it's helping us to create a bundle of services complete for the merchant, trying to make one-stop shop for them with different back office activities and to focus for them on the main business. And Daniel, who is Croatia, Bosnia, he's our manager. He will tell you more in details about two business lines, IPD and electronic cash register. Daniel, please.
Thank you. So first of all, good evening, everybody. Mentioning the business lines with Piotr previously mentioned regarding the services to merchant, at Payten, we are achieving the following benefits with the introduction of those business lines. First of all, we are diversifying our business, the old story of not putting all eggs in one basket. We are increasing our own bargaining power. Since now the majority of our customers are group of banks, which are mostly concentrated, they have a moderate buyer power, and by entering an industry with large number of merchants and with large and not so grouped one, we are increasing our overall bargaining power. Additionally to that, we are strengthening our overall recurring revenue, meaning that the industries like independent post-deployment, e-commerce, and ECR are some of the industries with the highest rate of recurring revenue. And least but not last important, we are increasing our overall client retention rate, mostly through creating one-stop shops for merchants, meaning that we are utilizing the synergy between the service to merchants business lines and between the old previously had payment business line by giving the merchant no needs for going to multiple vendors. The first among many and many to come business lines in the merchant-oriented segment is the independent post-deployment. And we are especially proud of one product under this business line called Single POS. We have a beautiful case study shown in Croatia, where the Single POS, it's mostly a solution used in both the favor of the banks and both in the favor of merchants, with whom we allow the banks to achieve a shared network of POS terminals among themselves. And on the other side, we allow the merchant to have the best actually possible fees on the market with a few technicalities on top of those nice fees. So what we did in Croatia is that we integrated with the 5 largest acquiring banks, which are also the 5 largest issuing banks in Croatia, with whom we cover more than 90% of all the cards issued on the markets. And the result was that we signed deals with 4 out of the 7 largest retailers in Croatia. From 2 of them are the domestic, while the other 2 are international, worldwide known, Spar and Miller. Currently, through the Single POS solution, we are processing more than 1 billion euro, and we are having more than 60 million transactions annually, meaning 5 million transactions on monthly basis. The solution was deployed in late 2018, and the beginning of 2019, we started with 420 POS devices on the field, and now we are having more than 3,000 terminals across Croatia. Our next steps definitely for IPD in general and the Single POS solution as part of IPD will be new market entry. The solution is already being piloted in the market of Bosnia, and now we are entering the market of Romania by starting the integrations with local acquiring banks when we already finished 2 of them. The ECR Payment business line is the youngest business line which we have, and the products which we offer in the ECR business line are not only hardware oriented, so not only cash registers, but we have point of sale software, basic account and back office software, orderments for table ordering, self-ordering kiosks, kitchen ordering software, management reporting tools, basic loyalty and voucher system, and hotel management software solution for small and mid-sized hotels. All the software solutions mentioned above are cloud-based solutions offered in a software as a service model, with monthly recurring billing. The client support is 24/7 available, and the software is regularly updated on monthly basis. The solutions are already integrated with some of the biggest and widely used ERP systems, not only in the hotel and HoReCa segment, but in the retail as well. On the next slide, if you could, Marcin, just please show us, we have an examples from the Croatian market. Thank you. By acquiring two companies from the ECR segment in Croatia, which were majorly present in the HoReCa segment, we now have more than 5,000 merchants with more than 8,000 cash registers. Most of the merchants, as I previously mentioned, are coming from the HoReCa segment, where we obtained more than 50% of the market share. And if we divide the market between low-end and mid and high-end restaurants, in the mid and high-end restaurants, we have more than 80% of the total market share. Definitely for the ECR payment business line, the next steps will be new product development and new market entries. The solution is already being piloted in the market of Slovenia, where we signed a contract with one of the most famous local fast food chains, and the new target countries to enter would be the one which have the same fiscal policy as Croatia, so it means Bosnia, Serbia, Montenegro. Which, as I mentioned on my introduction slide, while I was speaking about the benefits which we are gaining with the new merchant business lines, one of the most important things would be to achieve the strategy, the synergy between all those business lines and the currently existing one. We prepared a special strategy for that by creating a one-stop shop merchant experience for merchant by giving them all services on one place. So with our ECR, we are providing the merchant with fiscal software and with domain business management software. Through our IPD, we are giving the merchant the possibility to accept his payments in store. For all the online payments coming from web, we have our e-commerce services, and our POS related services are there to provide the merchant with all the needed hardware and all the needed field support. All issues happening can be driven from a single call center, where will be a single point for all merchants having all issues with above mentioned services. The idea is to have all under one contract, when the merchant which one contract can take, where we can take all the support for the IT businesses and the small business needs of the merchant. Definitely the implementation of this strategy would result in increased profitability on all business lines.
Okay, thank you, Daniel. Questions, we'll have them later. And now, traditionally, outlook for 2020. Yes, how does it look? Marcin, please show us the backlog coverage. Yes, so, or maybe not coverage, but the comparison to the previous period of last year. You see on the left-hand side, fourth quarter, and on the right-hand side, the whole year. And overall, for the company, there's a very nice growth. 14% growth compared to last year in backlog, which we think will translate to better results. Interesting conclusions are if you look at this separately for ASECO and Payten business, because for ASECO there is a significant growth, and we expect even bigger numbers in the traditional software business, also a bit better for dedicated solutions. Where for Payten, you see the effect of acquisitions. because for the whole year, the backlog coverage is higher because it includes the acquisitions which were not consolidated in first half of the year, yes, and even in the third quarter. Whereas in the fourth quarter, most of the acquisitions made last year were already consolidated. That's why the coverage is a bit smaller, still very satisfactory, and we expect nice growth in the Payten area overall as well. And this brings us to the question section. Yeah, so you're free to raise a hand or to put your questions on the chat. Yes. I can just mention as a warm-up that we had some questions on previous conference, and one of them was on the COVID impact of our business, which we already mentioned, and very visible in Latin America, which is a result of overall the worst results from this continent. But Christopher Sanderman, you have a question, yes, please?
Yeah, that's right. I have a question on the infrastructure side, because as you mentioned, the revenue is going down because of less infrastructure, but the profit is going up because of that. So going forward in the Q4 and for the coming year, do you expect that the infrastructure will be on a lower revenue, or will it be stable here now?
Well, you know, it's difficult to judge now because Q4 traditionally shows on infrastructure side a bit better results. It does happen that exactly now in the current period, late October, November, customers are pushing away their budgets, yes, or even December, and make some last minute orders, yes, which are unpredictable. Sometimes in earlier period of time. So this can increase the overall performance of the infrastructure business, but it's not our strategic focus. So this is pretty much what we get on the way as we go, and on the occasion of other projects, yes. But so it should be better in Q4, yes.
Okay, and on the backlog. Should you say that the margin on the backlog is more or less the same as you have during the first 9 months here today?
Yes, I would say so. The backlog is pretty stable, traditional recurring type of business. Majority of the backlog, I mean, more than 80% is recurring business that we have year on year in different business lines, yes, be it modifications, be it maintenance, be it transactional business that we mentioned in earlier part of the presentation.
When it coming to this Payten solution that you're offering a sort of full service, are you signing contracts for all the segments then, so you can tie the client for a longer term period?
Well, we would love to do this, and this is the direction, but today actually we are trying to catch the customer, bundle him somehow with the one of the bundle of services we have, yes? So we enter with a single service and then we try to add on top of it, yes? But the merchant related business is still not that big. Transactional business is big within Payten, but often this transactionality is based on big contracts with the banks, yes, where the merchant related business is just slowly growing, yes.
Okay, and if we're looking more on the strategy for the ATMs, MoneyGram, with this COVID and the lockdowns, and we see that people are moving more digital and also more mobile banking. What are you thinking about the medium-term strategy for ATMs? Is that some business that you will invest less in, or what you think? What is the future here?
Well, the same as we thought, I think, a year ago before the COVID. Basically, we do think this channel will become a more and more commodity type of channel. It will be a must-have, one of the elements of interacting with the customer by financial institutions, but not the only one, yes? What does it mean and how does it translate to our strategy? Basically, we say that if we want to enter a new market as a startup, just to enter, to grow from scratch, it doesn't make sense, yes? If we can build a strong position, yes, and a big market share right from the beginning, yes, then we can still make very nice numbers from market dominance and from consolidating the market and being high value added provider. Yes.
Okay.
So
Okay,
it depends on the scale, if we can get the market share and scale on the market. Yes.
Okay. And generally on M&A, what you have in pipeline, is it a lot of potential M&A or?
There is a lot of potential M&A, but as typical, I will say, you know, with the M&As, until you sign the contract with the seller, you don't know if it will happen. Yes. So the pipeline is big all the time. It's growing, I would say. Yes. But very often in the last minute, you know, it drops out because of some due diligence finding or the seller changes the opinion. But basically what I can tell you on the M&A is that we see the inflation of valuations very much because of the excess of money on the financial markets. Yes. So what we are focusing on is focusing on smaller targets which are not so visible, because of the strategy of the venture capitals and others. For them, it's too risky to invest in these smaller players, and we can consolidate and buy them because of the experience we have and presence on the market. Yeah. So this is how we try to find a synergy with our local operations and reasonable valuation.
Okay. Fine. Perfect. Thank you very much.
In M&A, we are looking at all areas from Payten to software and very much e-commerce. Yes. So I hope, at least on my side, you will hear news on additional M&As happening throughout maybe even this year and next year for sure.
Guidance for next year, are you giving that for 21?
No, well, usually we are giving guidance for 2021 after Q4 results, yes, because we are in the process of budgeting now, and it would be a bit very high level, vague, I would say. But what I can tell you is that for sure, from my perspective, we want to grow next year still. We want to show a nice growth. What digit growth it will be, I cannot tell you yet. Yes, I mean, we are reaching higher and higher levels in last years, so it's difficult to keep the dynamics as the numbers grow, but you know, we don't want to slow down too much. Yes, we want to keep the pace. Okay. That's on the intentional side. On the realism side, realistic side, I would say the analysts are having pretty conservative outlook for the future. We will see if we can beat it or not, but this I can comment after Q4 results. Yes.
Okay, thanks. Okay, thank you.
You're welcome. Please, I think, George, yes, you want to ask questions?
Hi. I just want to say congratulations. These were very good results in terms of the profitability and that you sustained some of the momentum in your core own solutions. One positive surprise was on the cost side. Ignoring the positive impact on the revenue mix, but what was behind the fall in the employee costs? And what can we expect going into Q4, which normally sees a seasonal bump?
Sure. I mean, there's an interesting finding with actually COVID related, but I'll allow Marcin to mention this. Yes, Marcin, please.
In terms of employee costs, we actually introduced a few policies just after the pandemic broke out, and we were pretty strict for our employees, to be honest. Yeah, so we froze the salary increases. We were, sending people to come to forced holidays, and we also used to some extent government programs that helped us to keep control. So for those employees who were not utilized because of COVID, and this is related, for example, to BPO services in Spain, we were using the government-sponsored program for covering their costs in some temporary period where they were not operational. So I think these are the major things that come to my mind when I analyze labor costs in 3 quarters of 2020.
Thank you. And in Q4, should we?
Yeah, maybe I would add to this. We had a drop in the travel costs, quite significant, as you can imagine. And being an international group, we traveled a lot. Yeah, so this is I think more than 500,000 now in savings. And another thing which might be less evident, Turkish market, where the lira very much weakened this year over dollar. We have revenues in dollar, salaries in Turkish lira, yes, which are increased by inflation index plus some small percentage, but on average, but this has positively contributed kind of on exchange rates, on cost level for the Turkish operations very much this year.
Yep, that makes sense. Shifting the conversation to the e-commerce side, with your e-commerce-based products, so the payment gateway and the security product in your key markets, and obviously Turkey is one of them. What were your growth expectations for this segment this year before the COVID situation arose?
They were smaller than we recorded, yes. They were more conservative. Actually, my colleagues in Turkey are pretty conservative while budgeting and planning their growth in e-commerce. So we have a nice history of overbeating the budget. But except for this, as I mentioned, the currency exchange also helped a lot. And there is, we had a coincidence of things which I will not mention here with the customers in relationship that helped to grow, but also the transactionality during the COVID period has grown more than expected. This also contributed very positively to the e-commerce growth. And we hope actually in the current situation, this dynamics to continue for some time. Yeah.
Mm-hmm. So looking ahead in coming quarters, you expect to see a similar trajectory, or an acceleration or moderation?
Exactly the same, but we expect still high growth in the e-commerce transactionality. Yes. Mm-hmm. There are other elements which impact this because we have different contracts, exchange rates, fixed exchange rates, flexible rates to dollar in case of Turkey. So we will see how the customers will approach this before next year, and we have to follow the customer and be flexible on this. So this can flatten a bit the growth, but overall we are on the optimistic side.
And geographically, are you focusing mostly on Turkey, or will you be looking to roll this out across all your key regions?
We are rolling this out. And we are very active in the Southeastern Europe region, but you must see that in Southeast Europe, except for Romania, where we are not that strong in e-commerce, the e-commerce is extremely small. Yes? So once e-commerce picks up in Southeast Europe, we expect to see much better numbers in this region. We are having a license-based business in Poland, in Morocco, also, yes. So we see some business from license, from change requests from these customers, and we are trying actively now to expand to other markets in e-commerce, and this is part of our strategy. Yes, and we are doing it directly with the banks, but we also want to start offering the e-commerce service through the merchant business that we mentioned earlier.
Yep, that makes sense. Thank you. And just a final question, I'll let other people ask as well. On the banking solutions, we've seen, again, very strong growth in profitability as you're scaling up your sales. And in terms of margin expansion, where do you see that going from here? Do you see further potential for expansion, or should we see that moderate?
Well, there's few elements, but I would say an element that we've been mentioning a couple of years ago already, that there is a huge room for improvement in the kind of operational governance of the projects we run, in the project management, in evaluation of the projects, in execution of the projects, and we are capitalizing on these changes and improvements all the time. I do see still a lot of room for improvement. I'll just give you one example that has proved to be good for us, yes, and we want to expand this to more segments, is we started after many years of consolidating the business, international business, our colleagues from different countries started to trust the organization, trust each other much more. And slowly we are establishing a specialized service centers, yes, for particular needs. We outsource development in other countries because of lower costs for select countries, and we created an international delivery unit. We call it internally EDU for some type of projects. The biggest scale of this has taken in the mobile projects, where majority of our mobile business is a couple of years ago was in Croatia. Still, Croatia is very big, but we are very international with our mobile business. And like 4 years ago, our mobile projects, 5 years ago, internationally out of Croatia were loss-bringing, all of them. Today, we are generating high profits from international business, and all of this international, or most of it, is serviced by this international delivery unit, which was kind of centralized, governed, and run from different geographical locations where we can capitalize on efficiency and costs and proper management.
Perfect. Thank you very much.
You're welcome. Any other questions, please? So guys, we are pretty positive as to Q4. We hope to be very positive about 2021, but this we will comment after the Q4 results. This is occasional time of showing some strategy, more details, more insight, where we grow, where we develop. M&A should also continue, and you know, we just hope to grow, yes, and provide good news. Let's hope it will help. If there's no more questions, I would like to thank you very, very much, and invite you for sure to the next conference, and you can ask questions on email, on whatever, mobile, as you wish to Marcin or myself in the meantime. Thanks a lot. Thank you. Bye-bye.
Thank you. Bye.
Thank you. Bye.
Thank you very much. Bye-bye.
Thank you. Bye.